Is euro sterling. We've had on the weekly time frame, we've had a pretty decent false breakout from this kind of rectangle here. Let me just elaborate on this. We're in consolidation here, and we've just been for the past kind of like 10 1 2 3 4 5 6 7 8 9 10 11 12 weeks even, we've just been simply oscillating between these two levels here, this floor and this ceiling. So it would make sense to simply buy the bottom and sell the top, but as we are still in an upward trend, it would make sense to simply have our bias on the continuation to the upside. Given that this was a false breakout to the downside, when we have a false breakout, there typically is quite a powerful reaction in the similar kind of like in the prevailing trend direction. So here we go. On Friday we closed as a bullish pin bar reversal inside this kind of rectangular square, and it closed in. All crucially, let's just tidy this up a bit so that it's actually level. There we go. So it closed inside it. There we have it. So the high of last week was here. So if we did essentially look to buy this, what we could do is we could simply place our entry just above the high of Friday, stop loss below the low. That seems pretty valid to me, and have our target essentially towards the top side of this range. Let's have a look to see what the reward to risk is. So we have a 1.73 to 1 reward to risk trade. If we are targeting the top side of this range, of course, this would be target 1 after we scale out at a 1-to-1 round about here. One other idea is simply trading this on the weekly time frame and 50 fibbing it. As you can see here, we've got bullish reversal divergence. There we go. We've got a lower low here, and we've got higher highs on the RSI setting 6, and of course the stochastic 833. That is, it makes for interesting reading. If what we wanted to do is simply 50 fib it by having our order halfway down last week's bar at roughly the 50% mark, and we can always do this based on Fibonacci retracement tool, but let's just do it roughly here. We can increase that reward to risk quite nicely. There we go. But the only downside with this is the fact that price might just simply rally upwards, and it might not come back to trigger us in at the midpoint, which is round about here. So if we do enter at the midpoint of last week with our stop loss below the low of last week, it means that we can essentially get a 3-to-1 or 3.27-to-1 reward to risk trade if our ultimate target is the top side. But if we're risking 2%, that's about 6.5% potential gain. But of course, with the latter modus operandi, if you did take the advanced entry at the midpoint, there is the risk that price will just simply go up next week and it won't trigger us in at our midpoint entry. Pretty much like what happened with Aussie CAD actually. Price didn't come back to trigger us into the trade, even though that trade hasn't gone anywhere. Okay, so pros and cons. If you wanted to go for a slightly safer entry on the daily time frame, which is just based basically on the break of the high, it will mean entering at the high of Friday, stop loss below the low. As you can see here, it's going to give us a slightly less efficient entry in terms of reward to risk than if we took the midpoint on the weekly time frame. Okay, so that is EURGBP. You've got two options there.